Traders, before we get started, I just wanted to make one quick announcement, and that is we will be raising our subscription rates effective January 1st, 2011. Not to worry. My Christmas present to all of my subscribers is that your rates will not change. They never will change. My belief is that we reward loyalty, and us as a family, as we have grown, will stick together. But the rates will go up by 50% across the board. So the reason I'm bringing this up to you, if you are a monthly subscriber and we're considering going to, let's say, either the semi-annual, meaning paying every 3 months, or the annual fee, which of course is the greatest value at $1,000 per year, that's going up to $1,500. What you'll need to do is, if you change your registration status before the first of the year, I will allow that rate to be grandfathered in. So if you're a monthly subscriber, you want to go to an annual. If you're a monthly subscriber, want to go to the quarterly, go ahead and do that. What we'll do is we'll work out an accounting where we prorate back whatever you had left on your existing plan. We'll prorate that back and cancel that profile and let the new one run. What you see on the screen is the address that you go to, the web address, and you can go there and then make all of your changes. Enjoy the update. Hello traders, Gary Wagner with the Gold Forecast here. It is Thursday, about 9:30 here in Honolulu, Hawaii. It is the 30th day of December, and this is the Daily Report. Gold trading lower this morning, actually trading down about $6. However, in true selling, it's down about $11 to $12. You've got a weakening U.S. dollar giving it a $5 boost. You've got a negative in terms of the predominant selling. That's taking it off between 11 and 12, therefore the net change of about $6. On today's report, we are going to talk about the fact that it might be prudent to pull profits on our position, kind of ride the new year out flat, and look to reposition ourselves once we re-enter the market after the first of the year. That will be the main topic of discussion, all here on today's Daily Report. Traders, I want to look at the market in a couple of different ways, on a couple of different time cycles and different types of charts. We are currently looking at a daily candlestick chart. As you can see, what we have seen right now is these two small bodies. We've got very thin trading as we go into the close of this year. It is technically what is called an engulfing bearish. There is no confirmation. I'm not making too much of it right in here. And you'll see when we turn it into our average chart, which of course realizes a lagging chart, is still showing us a weakening but a defined uptrend. So as you can see, traders, I've taken the same chart, I've just converted it into an average chart. And when we take a look at it this way, it certainly doesn't look nearly as weak as some of the other charts we're going to see in a couple of minutes, which are intraday charts, 320-minute chart and probably a 160-minute chart. We still have the scenario where we have no lower wicks. That is good, but we also see that the body length right in here is beginning to shorten. That might be due to the fact that we are simply getting close to the New Year's, but we had a slew of economic data coming out in the U.S. which was painting a much brighter outlook. One of the things that I thought was worth noting was the fact that in terms of our unemployment rate, in terms of people filing for unemployment compensation, that number actually went down. It's the lowest it's been in 2.5 years. That to me actually is a sign that in fact the U.S. might be witnessing a slow but turnaround in terms of an economic recovery. So when we look at it in terms of this Henkin chart, we're still firmly entrenched in a bullish uptrend, but that trend does seem to weaken. However, here's where the picture changes, and this is what's gotten me a little bit concerned and the belief that it might be wise to pull profits. We're looking at a 320-minute candlestick chart. And when we look at this candlestick chart, of course, it gives us a little bit more information than the daily chart, but it still gives us a good, strong indication in terms of a larger overall move. And the one thing that I am witnessing here that I see quite clearly is the engulfing bearish that we've gotten here has confirmed. And when we take a look at it, you've got this market, which was on a fine upward trend. This is from that 1365, those lows that it hit. It did, in fact, breach this one top. This is what we talked about. That's at 1408. But it wasn't able to sustain it and hold it on a closing basis for too long. So now what we're looking at least on a 320-minute chart, is we are looking at activity which is indicative of a market that's at a top. You can see these engulfing bearishes. They do appear at the markets when they are tentatively at a top, and when it does appear as though the market does have some potential and some room for the downside. For that reason, my advice is going to be to go and take our position, our stop, to the market and pull profits. Traders, you should get out somewhere around 1405, 1404. Even if it breaks to the upside, I have no problems buying it higher. I have no problems buying breakouts. I have no problems buying dips. Fundamentally, I'm very, very bullish for the next year on gold. But if it's going to come down, I don't really want to leave the money on the table. I would rather take the money and run. Very quickly and lastly, I want to take a look at one last chart, and that is the Henkin chart. And this is, again, a 320-minute chart. It is our average chart. And it is also showing us the potential for downside activity. As you can see here, we have started to get, as you can see, these red candles and red candles in this chart, of course, is indicative of the market moving down. After this nice rally propelled this market up, we absolutely took out this one top. But as you can see, we have, at this point, we have breached that. So my recommendations, traders, is to go ahead, let's pull profits, let's have a nice New Year's, not worrying about what the market's going to do January 3rd, and in this way, enjoy the fruits of our labor. It's been a great, great year. This has been Gary Wagner with the Gold Forecast, wishing you, as always, good trading, and we'll talk to you tomorrow for the wrap-up of the year and the last daily report for 2010. Bye-bye.